50 and 500,000, that's what you're going to get. You ask for somebody that wants, people that have between 100 and 250, that's what you're going to get. So there's a limit, right? We're in a small market. We're in the Sacramento marketplace. It's really a small market. And we've been doing this a long time. And we do 47 or 45 dinner seminars a year, right? We do a lot of them. We do radio and all kinds of stuff. So we've saturated our market. And we're still getting, this week we got 17 new leads. 17 people have signed up. Maybe only 13 come in. 4 of them maybe back out, right? And they don't come in for one reason or the other. So we get 13 people will come in. We'll go through and maybe, half of those won't close for one reason or the other. They're locked up in things we can't move, or they got $1 million, but it's tied up in something that has penalties or whatever it may be. And if we close 5 or 6, we're happy, right? We're really, really happy. This last month, as we all know, these rates are coming down with all the insurance carriers. We're all aware of that. And because of this last month, last 30 days, we did about $12 million in new applications. A lot of it had to do, we accelerated some of the business that we were in the process. So I had a couple of my clients who were at meeting number 3 and they haven't closed yet. They want to proceed, but they said, let's do the application. In case you don't want to proceed, we can tear it up, but they're all going to do it. So we had a really, really good 30 days, doing about $12 million or 11 and a half, whatever it was in applications, not including our AUM business. And again, we're no different than anybody else on this call. We're just 2 guys that are out there, doing marketing, doing dinner seminars, doing radio and TV. Our dinner seminars do generate by far the most activity. They do. Because there's no way we could get 17 qualified leads from radio and TV in a week. It's impossible. We never have, and we probably never will. Doesn't mean these people that came last night or this week to our seminar didn't see us on TV. They could have, or heard us on the radio. Maybe that incentivized them to come, which is probably the case with some people. But, we're trying to generate 25 to 30 new leads a month. That's our goal. 25 to 30 new leads a month. And we're trying to close, if we have all the fallout rate and all that stuff that goes on, people don't qualify. All we're trying to do is close 6 to 8 a month. That's all we're doing. And between both of us, and that gets us $100 million a year. If people have more than $1 million, that's our 100 million, which we're looking for. So we're not working any harder than anybody else. We're just, what we're asking for is we're getting, right? That's what we're asking for. So I'm going to pop this up here, and I'm going to shake it. I'm going to probably fumble here, folks, because I haven't done this before. Go ahead, Dina.
Jim, I just have a quick question. So Dave asked, do you find the 5:45 arrival time works, or should it be 6 p.m. or 6:30? He's trying to determine, and I know you guys have probably played around with these times, so.
We have. It depends on where you live and the traffic conditions, right? Sometimes 6:30, if you're in a metropolitan area, makes more sense because maybe traffic's less. But if you go to, if we're asking for just retired people and soon to be retired people, and people at a certain point, they don't want to come out, too late. They want to get back home. So we found 6 p.m. is our kind of a magical number for us. And, we start letting them in at 5:45, right? So they may be sitting in the lobby at 5:30 or 5:20, some of the people, but my staff starts letting them into the seminar room at 5:45. So by 6, hopefully everybody's seated. Usually there's a straggler or 2 that comes in at 6:03 or 6:04. I'll wait until if I have but just one couple that's not there by 6, I'll go ahead and start. But if there's 2 or 3 couples not there, I'll wait until at least 2 of those come, right? I don't want to have them interrupt, because when I start the presentation, I don't want public people coming in and out of there. We won't let the servers come in and out at all. They have candy on the table when they Ghirardelli chocolate when they come in. They get bread, butter, salad, all that served before 6 p.m. It's all there. And at 6 p.m. it's done, and hopefully those doors are shut at 6:05. That's our goal.
Okay, perfect. And just before you start, there was one other thing. Jake, you had asked what book Jim was recommending. In starting off, if you were newer and you're trying to get familiarized with the concept, Jim said make sure you read Mama's Secret Recipe for Retirement Success. which is Dan and Jim's book. Jake, I know you know what that is. It's their whole dinner seminar, basically, in a book that Jim said. And then, obviously, the best way is to take that dinner seminar. We have it on Dropbox, and it is transcribed, so it's great too if you can go through it with those notes and see what they're talking about. So, alrighty, I think those were the only. Oh, one last question. Chiquita wanted to know: are the meal orders taken when they arrive?
Yes. Yeah. Now, I should say, honestly, I'm trying to think now. Maybe I don't get involved with it, right? We have the staff.
I think they are in
But
your
yeah.
in your instruction book. It says they are.
I didn't know if they gave them that information in advance or if we do it right. I think the server does it right when they get there. Yeah, they do it that way. I don't pay attention because I walk in at 10 minutes to 6 or 5 minutes to 6. I walk in and it's all set up by our staff. So typically we have 3 staff members there. You don't have to. You can do it yourself. You can have 1 staff member, but we have 2 of our ladies there, staff members, and then we have my paraplanner there. And really, he's more than a paraplanner, but he's a great guy, Randy, in my office. Randy goes there about 45 minutes earlier than I get there. He sets up the screen, sets up the projector, makes sure there's water for me, make sure the room's set up correctly, make sure the air conditioner is on, so he makes sure everything is set up before I get there. And then about 5:30, about a half an hour before, 2 of our staff members show up, and they are making sure the candy's on the table. They put the brochure information on the table. They make sure the room is set right. They're coordinating the number of people that signed up with the number of chairs to make sure they're situated correctly. So all that's done by 5:45. In 20 minutes, that's all done by my 3 staff members. And then I walk in about 10 minutes to, or maybe 5 minutes to, into the restaurant building. And I'm there for 5 minutes, and I jump on stage.
Do you prefer to use? Yeah. Do you prefer to use a screen and projector or use a TV with HDMI cord?
We're using what the restaurant has, unless it's not big enough. We want a big screen. I mean, big screen, because you got an audience, right, sitting back, 40 feet from you in some cases. And, as you get older, their eyesight may not be good. So we want we have a huge screen in case the venue that we go to doesn't have a bigger screen. We'll bring our own screen. So you don't want a small screen. You want something clear, vivid. You want it big. Even in my conference room right behind me, both Dan and I have conference rooms in our offices here. I have my conference room, I have an 85-inch screen, right? And I'm even going to get a bigger one because people, you want it to illuminate there and with size when you're talking to them. And again, people get older, their eyesight gets worse. And you want to make sure they see what you're saying.
Jim, I know you guys use a few different locations. Can you talk about the type of restaurants each of those are?
Well, right or wrong, we're dealing with high-end restaurants because we're asking people to have more than $1 million. That's what we want there. And whether we're right or wrong, we don't know, but we think that's what's going to attract them in many cases. So we're doing Ruth Chris Steakhouse, and then we're doing we have a Morton's in town. We have done Morton's many times, but it's in a location that's difficult to get to at times because of the downtown traffic. And then Ruth Chris is near downtown Sacramento. Then about 20 miles away in a different area, we have kind of like a triangle we do. We use a seafood restaurant called Scott's Seafood. It's a high-end seafood restaurant, a beautiful restaurant. And then on the other corner of the triangle, we use a restaurant called Hawks. It's a Michelin-rated restaurant. It's one of the best, if not the best restaurant in the Sacramento marketplace. So we have 3, kind of like a triangle. We mail to each end of those triangles, and we mail 12,000 mailers out each time we do it. Or maybe 15,000 now, because we started with 8,000, then 10, then 12. And I think we're at 15,000 now because, again, we've been doing this so many years and so many seminars. We're going out broader with our saturation because, we have saturated the market, because we do this all the time. And so we'll go out wider and wider with our net. So it costs us more money each time we extend that, those invitations from 12,000 to 13 to 14 to 15,000. And our goal is, we would love to get 20 to 25 people, which is about 10 to 12 buying units at our seminars. That's what we shoot for. And sometimes, like last night, I had 10 buying units. Dan had 9 buying. Well, I should have had 9. One of us had 10, one of us had 9. So we had 19 buying units this week. You know, we got 15 people to show that will come meet with us, or at least signed up to come meet with us. And you have to do it at the seminar. You cannot wait till the next day and call them back. It's over. They're not going to come in, folks. You got to close them right there at the seminar. If you don't, forget about it. Not happening. You get 1 in 10 to do it that way because it's hard to get a hold of people the next day. And if you do, they have all kinds of excuses. And you get them while they're excited, right? They're excited by the information we delivered to them. That's when you have to get them to sign that calendar. You cannot wait. You're completely wasting your money if you do anything different. And we tried it both ways.
All right, without further ado, here it is.
Okay, let me bring it up on my screen here. So like I mentioned a minute ago, I'm actually going to read this to you because I've never seen it before. But for those of you that are, I'm going to switch it over here so I'm going to switch to my side so I can look at you guys at the same time. So I'm looking at a different screen here, so I apologize. I'm not looking at you, but I want to be able to look back and forth. So for those of you that are afraid to do the presentation, today I'm a rookie. I've never seen it before. I'm going to run through it, and I'll make some mistakes. But next time I do it, I'm going to be even better. So I'm just going to read it, right? I'm not going to improvise here. So the audience is out there. I tell them, good evening, everybody. My name is Jim Files. I'm the co-founder of Peak Financial Freedom Group. My partner, Dan, and I own the company. We have a great support staff here in Roseville. We're about 7 miles away on Douglas Boulevard. I'm going to give you some warnings tonight. Number one, I'm going to talk very, very quickly. I have to do that because I'm going to give you a lot of data. So if you come in the office, I'm going to slow everything down, but I give you a lot of information. Number two, because I'm going to give you a lot of information, some of it may not be pertinent to you. I don't know your financial aptitude. I don't know why you even came. Hopefully you came for all the good knowledge that I'm going to deliver to you. But if it's not important to you or if it doesn't make sense, just wait till the next slide. And that will hopefully help you be entertained with what I'm going to talk about tonight. Number three, I ask you not to take any pictures at all during the presentation because we're in the securities business. There's disclosure requirements, no pictures. And number four, please, no questions during the presentation. The reason for that is you just disturb the audience. They may not want to listen to your question. But if you have questions, I'll be sitting out afterwards having dinner outside the seminar room here. Just come out afterwards and I'll be happy to answer your personal question. So I do that on the front end. That's my kind of entree. I said, okay, well, I'm going to go ahead and get started. This is a fast-paced workshop that will teach you the truth about, number one, 14 must-answer.
Hang on, Jim. I don't think you're sharing the presentation yet.
Oh, got it. There we go. There we go. So, can you see it now, Dina? Okay, this is a fast-paced workshop that will teach you the truth about 14 most answered retirement questions, actual stock market returns, the real meaning of risk, the total fees you're actually paying right now to have your money managed, safe income withdrawal rates, 7 rules for retirement security, using 3 buckets for retirement success, replacing your paychecks with guaranteed lifetime income in retirement, income taxes in retirement, creating a customized written income plan, planning for your legacy, and how to stop worrying about your money. A few key items about the workshop and our free consultation that we're offering you tonight. We won't talk about specific companies or products this evening. We'll cover factual data, strategies, and options we use in our planning. We'll provide up to 8 hours of information in this next hour. You'll receive a free, no obligation consultation and a second opinion about your money. You will have the opportunity to receive a free, no obligation written retirement income plan. You can download our books and watch our educational videos at peakfin.com or our YouTube channel. So, how do you survive and thrive in retirement? Well, the first question most people have is, how did you get our name? Well, we don't know who you are. There's mailing companies that we engage with. They know who you are, and they send out a mailing. So you show up, and you come to the restaurant, and we meet you for the first time. So we don't have any information on you. Secondly, why did you come tonight? Did you come for the good food? Did you come for the good information, or both? And people start laughing, right? Because there are people that come there just for the food, and they don't even want to listen to the information. Maybe you want to take back control of your finances. Well, until you watch the values of your assets go up and down every day, you save so much and you wouldn't have to worry in retirement, you thought, but even worry more and more now that you're getting close to retirement or in retirement. You saved and you've accumulated assets for retirement. And you want to answer some of the most important questions that you need answered if you're married. And if you're not married, you need answers as a single person. Do you want to try to be rich in retirement? Is that your goal? Or do you want to guarantee you won't be poor in retirement? Well, maybe you hope you're okay. You hope everything will work out for you. But deep down, you worry because you worry about being poor. You're worried about making a financial mistake. This could be the same guy after big mistakes and big losses, right? He made the wrong decisions before or during retirement, and it cost him what he wanted to be able to do in retirement. You know, maybe you plan for a stress-free, happy retirement, but now you find you can't sleep at night because you worry about your money. This is the same lady, right? Looks and feels 20 years older after worrying so much about her finances. Maybe you want to live life and do all the things you plan for, but you don't know how to create income and you're scared or afraid to use your money. Worried about your budget, right? Every month you sit down, if you're married with your spouse, you're afraid to spend money, and that's not good for a relationship, and it's not good for your stress level. Well, most people come to our seminars because they're worried about their money. You're retired or you're soon to be retired, you're not making a salary, you don't know how to replace your paychecks once you do retire, you're not saving any longer, you don't have time to make up losses, you don't know how to create lifetime income that will never run out. And I don't care how much money you have, whether you have $1 million or $20 million, everybody worries about their money. And our job is to help you stop worrying about your money. But if you're a worrier, I can't stop it completely. I'll hopefully lessen your worry about your money. And you worry because you have questions about your retirement you haven't had answered for you in the past. Number one, when can you actually retire if you're not retired? Number two, have you saved enough money to retire? Can you guarantee you will never, ever run out of money? How much will you lose in the next stock market crash based on how you're currently positioned with your portfolio? Can you protect your assets from losses? Number six, how much can you withdraw from your asset base in the form of income in retirement? How long will your money last once you start that withdrawal process? How much tax will you pay? And when should you start your required minimum distributions or your IRA distributions? Should you wait till 73 or should you start those distributions earlier? How can you fight inflation? When should you actually take Social Security if you haven't activated that yet? Can you start spending your money? You saved your money for your entire life, right? You worked, you budgeted. Now all of a sudden you're afraid to spend it because you're afraid of inflation. You're afraid of losses. You're afraid of running out of money. Number 12, what am I really paying in fees to have my money managed? And number 13, what if my spouse or I pass away in retirement? And lastly, can you leave money to your kids, your grandkids, your beneficiaries after you use your assets for income? Everyone in this audience tonight has every one of those questions in the back of your mind if you're getting ready to retire or you're retired. And I promise you, because I do this every day, virtually none of you have this in writing. And unless you have all these questions answered in writing, very specific to your situation, your goals, your needs, your wants, and your objectives, your entire retirement future is based on open luck, right? You hope it works out, and if you're lucky, maybe it will work out. Where our firm doesn't work with hope and luck, we work with data. We're using specific strategies, very unique financial instruments. Everything we do is with science. We're going to put together a plan for our clients to give you the highest probability of success in retirement. So those are the slides that, other than the last one here, those were the new slides on the front end that added. So again, that was the first time I saw them. I stumbled a few times, but I bet you if you're in the audience, you wouldn't even know I stumbled. And all I did was read them. That's all I did is I read those slides. So now I'm going to go back to the back part because he added some things I just saw in the back. So let me just get out of here. Go to the back here. So I'm going to start. I'll just start here. These first few slides you've heard before. It'll dovetail me into the new slides again put together for us. So at this point in the presentation, I've been talking for 40 minutes or 45 minutes, and I've given them all the things that were issues that they're concerned about. Now I'm going to solve them for them. So we live by 7 rules that we've created at Peak Financial Freedom Group. Number 1, avoid large losses. Use our 5 to 10% rule. Even if you don't use this, find somebody that knows how to mitigate the risk inside of your portfolio or your assets. Understand and minimize your fees. I can't get out of fees. We're in a financial service business, but you should be knowledgeable about your fees. you should have all your fees in writing for you, whether you're with an advisor now. If you ever came to my firm, we're going to itemize these for you, because fees will eat you up like cancer in the long run if you don't control them. Again, we're not getting out of fees, because we charge fees too, but you understand your fees and make sure you're getting value for those fees. Number 3, reduce your volatility, which is risk. Number 4, earn a reasonable rate of return in retirement. You're not trying to hit home runs. We're hitting singles and doubles, right? We want to make sure that we don't lose a lot of money in a market drawdown. Manage your taxation efficiently. Know when to start drawing from your IRAs or your 401ks. Number 6 is very important. All of you in the room tonight have saved your money more than likely to supplement your Social Security in retirement, right? If you have a pension, that's great, but most people don't. You get 2 choices. Number 1, you can generate certain income from your assets that will last for as long as you live. Or number 2, you can generate maybe income that could end any time. And the difference between these 2, certain income is like pension income, right? A pension income stream is an annuity. You can make a pension income stream out of your own money, and we'll show you how to do that if you're interested. And number 2, maybe income is income we're going to pull off your portfolio. It's not guaranteed. Markets will do this forever. We can do all kinds of calculation, but there's no guarantee. So you get the choice when we're putting together a plan for you. Do you want guaranteed income? Do you want maybe income? Or do you want both? And most of our clients do choose both, but I want to make sure you understand and we differentiate how these 2 income withdrawal systems work. And number 7, have a written retirement income plan before you do business with anyone. Have an income plan, have a tax plan, have a legacy plan. Where's your income coming from? Will it increase? Will it decrease? What about income source? Is it guaranteed? Is it not guaranteed? You have a tax plan. How much after-tax income are you going to get in retirement each month and each year? Is it enough to maintain your budget? What about inflation? What about rates of return? What about your beneficiary? Have all that information in writing so you, as a consumer, as an investor, as a retiree, can make intelligent decisions on your future without someone just telling you you're going to be fine. Most people will take your money, they'll stick it in some investments. You'll have no idea how those investments work. You'll have no idea what the fees are, the risk, and you hope it's going to work out. And once or twice a year, they meet with you. You get a bunch of statements you don't understand. You meet with your advisor, you leave, you still don't understand what he said. We're not going to do that. We're going to build a plan for you. We are architects of building sophisticated and comprehensive plans so you understand what you're doing before you invest a penny of your money. And if you do all these things, whether you use my firm or not, you will be more successful in retirement. So, the planning process. If you meet with us, at some point in time, we're going to get your statements. We're going to ask you for a lot of data. It'll be easy to collect, but we're going to need this information to start the planning process. First of all, we're going to analyze your risk. We use outside research companies to analyze your risk. I can tell you within a 95% accuracy how much you're likely going to lose in the next market drawdown or downturn. All that data is available through the research companies we've used. Number 2, we're going to analyze your funds. What type of mutual funds or ETFs do you have? What type of fees are you paying? What are the internal trading costs? All those things that you don't understand, I'm going to make sure you're clear on it so you know what your fees are. Number 3, it's going to be what your funds are and your fees are. And lastly, we're going to make you do a budget. We have a form. It won't take you more than 20 minutes, but I have to understand how much you're spending every month now. And if you're not retired, we have to do some calculations of what you're going to spend when you do retire. Don't think you're going to spend less money when you retire, because you likely won't, because those things that you've dreamed about you're going to want to do, travel, entertainment, etc. Because your budget becomes a super important document in the planning process, because I have to determine how much after-tax income I need to get you from your asset base and your other income sources to make sure that we're going to maintain your budget, hopefully get excess cash flow above your budget, so you can clearly see in advance before you retire, or if you're retired, exactly where your income's coming from, what your tax is, what your expenses are, and can you get excess cash flow above that. And by doing that, we will do a retirement income projection for you, an income tax analysis. We'll do an analysis of assets to the beneficiaries when you pass away, and we'll put the entire plan and the details of that plan in writing for you. Let me give you a quick case study. This is Bob and Carol, both 65. They retired 2 years ago. Bob's an engineer. Carol was a state employee. Carol has a pension of $24,000 a year. Both Bob and Carol have turned on their Social Security. They have $1.6 million of assets. They're not using because they're worried about the market being so high, potential losses, money running out, taxes, fees, kids, volatility, and low returns. They've had a broker for 22 years. They love their broker, but they've never had a plan. they attended one of these workshops, and they loved what we were explaining to them, met with us, and we put together a plan. So I'm going to give you kind of an overview of what we did for them. This is just an overview when we met with them. They had $1.6 million of assets, as you see here. When I asked them, I said, how much, Bob and Carol, are you paying in fees? And they looked at each other and said, I don't know. And I said, well, you've been with your advisor for 22 years, right? Yeah. You don't have an idea how much you're paying for it? No, I really don't. And Carol said, I think maybe about 1%. I said, okay. So when I did the analysis, I said, well, you thought you were paying 1%. You're actually paying 1.25% to your advisor for his advisor fees. Your mutual funds, not only you're paying your advisor fee, but those hidden fees I talked about earlier, I said you had also hidden fees, you're paying 2.92% approximately. You have a variable annuity, and you're paying 4.61% with all those internal fees that you didn't understand. And of course, on your bank money, you're paying no fees at all. So you're paying 3.08% in fees approximately, and this is done by a company called YCharts, along with this Analyze Your Statements. You're paying about $49,000 a year in total fees on $1.6 million of assets. They looked at me and they were shocked. How's that possible? I said, I showed them the data, right? We have all the data from Nitrogen and YCharts. I showed them their statements. I showed them their, year-to-date fee they're paying their advisor. And they said, wow, we knew it, they had no idea. I said, well, let me ask you, now that we've gone through the fee analysis, what kind of risk do you think you have? Now, of course, I've already taken them to the risk tachometer. I know what they want risk they have. And they said, well, we think we're probably conservative. We hope we are. That's what my advisor told me. I said, well, we've done analysis, and we used a company called Nitrogen for this, and I've already showed them the Nitrogen report. This is just a summary report, you guys here. They had a risk factor of 49.4%, which means if the market goes down by 53% like it did in 2007, 8, and 9, or 57% like it did in 2001 and 2 during the tech bubble, this client, you, for example, Mr. and Mrs. Client, are going to lose approximately 49.4% of your money, or $790,000, which means you would need a 97.5% rate of return if you lost 49.4% to get back to even. And they're shocked, right? Wow, I have no idea that happened. When we remodeled the portfolio, based on the client's objectives, not mine, based on what the client wanted us to do for them, we repositioned the assets. We left the $200,000 in the stocks like he had before because the husband had actually picked these stocks, Tesla, Amazon. He liked them. I said, listen, if you like those stocks, you already have a gain in there. There's no reason selling them. I don't need to charge you a management fee. You just manage those. You understand what the risk is. Okay, that sounds good, Jim. We put $800,000 in the guaranteed bucket because that's what they wanted. They wanted guaranteed lifetime income forever. They wanted to spend money, and they didn't want any stock market risk with those assets. We put $100,000 in the banks. We bumped their bank account from 20 to 100 because I thought that's what they needed to do. And we put $500,000 into our asset under management platform that uses stop loss technology. The same $1.6 million. Nothing changes. On the fee structure here, we reduced our fee from paying $49,000 a year to paying $17,150. We still made money, but we restructured the portfolio, and the fees happened to be less. Which means we're saving them $32,000 a year, which is $640,000 of savings over 20 years if the fee stayed, stagnant. On the risk side of it, we lowered the risk from losing $790,000 or 49% of the money to losing $150,000 or 9.4% of the money. And the reason the risk was higher than we wanted is if you look up here under the stealth managed stocks, the husband wanted to still manage those stocks. That's where all the risk was. If not, I would have lowered the risk to about 2.5 or 3%. So now everybody in the audience looking at it and said, all of you say those poor people. And I said, well, I do this every day. That's 95% of you right here in this audience today. You will look very similar to that when you come in. When I finish that, what we do is that we do an income analysis for the client. So at the top of the screen here, that's their money, the $1.6 million. That's how I divided their money up from the previous page. They were making $78,000 a year when I met them. They wanted more money, so I pumped their first year income up to $138,000. And they had some very special needs in 5 years. We pumped their income to $150,000. So you can see here from left to right, the year, Bob and Carol, her pension, Social Security, and then how I divided the assets. When I do this and I show them that we increased their income, almost doubled it to $150,000, the first thing people think is, wow, what kind of taxes am I going to pay? We do a tax analysis. If you look here, total income in year one was going to be $138,000. We took their standard deductions. They're going to pay $20,267 in federal and state income taxes. They're going to be in an effective tax bracket of 15%. Gross monthly income is 11.5, which is 138,000 divided by 12 months up here. Taxes per month is the 20,000 divided by 12, 1689. Green, net after-tax income monthly. Red, the budget this client provided me, which included all their entertainment and all their travel. In blue, monthly excess cash flow on an after-tax basis above their budget. So if you multiply 2,300 times 12 months, that's about 26,000 plus. That's extra cash flow. So what can you do with extra cash flow? You can spend it, you can save it, you can help remodel the kitchen. There's all kinds of things you can do with it, right? Our goal is not to get you just your budget number, because that's no fun. When you're in a budget, you're always worried about, if something comes up, can I really afford that? Our goal is to take your assets and design a plan where we can generate excess cash flow on an after-tax basis above your budget, so you can do some things that you always plan to. You want to go to Hawaii in January, well, you got excess money to do that. You can do that. So when we finished that, they said, okay, if we were going to use all this income off of our assets and deplete our assets in our retirement, how are we going to possibly leave money to the kids and the grandkids? Well, we'll do a quick analysis for you. So if you look here, that column is representing the income we're having coming off the asset we're managing. Not your Social Security, not your pension, just the income off the assets we're managing. This column represents the cumulative income you would have taken out each year at any given stage. And if you look at the top here, these is where we're making our assumptions. This is where we're actually hypothesizing. And we tried to make these conservative. These are numbers we don't know for sure, but I'll show you. For your portfolio assets, I'm assuming, what if you get an average annual rate of return of 4%? On your bank money, what if you get an annual rate of return long-term of 1.25%, CDs, treasury bills, etc.? And on your real estate, what if your real estate goes up or appreciates an average of 1.5% per year? So those are my assumptions. So let's say you're both 85. That year you're taking $68,617 of income off the assets that we're managing for you. You've taken $1.371 million in cash flow. You spent every bit of that, include the excess cash flow. You spent it all. You didn't save a penny. Your portfolio dropped from 1.497 to 1.269 because I'm only assuming a 4% rate of return, but I kicked your RMDs in at 73, and you're taking out more at this point than my return. It's just my model, right? Now, of course, if you have a higher rate of return, which we hopefully you will, that will go up, not down. Your bank money went from 101,000 to 129 because we had a 1.25% increase each year in my model. Your real estate jumped from 1.2 to 1.6 because it went up 1.5% per year. And both of you accidentally passed away in that day, and you leave your kids $3 million. So the key here is you don't have to get high rates of return on your asset base or your real estate or even your bank money. What you have to be conscious of is you have to make sure you don't have a big loss in retirement. You have to make sure you're mitigating the risk. You have to make sure you have a plan in place so that you can see this stuff. Because what I've shown you so far is I showed where your income's coming from by income source. Will it go up? Will it go down? Will it ever disappear? Is it guaranteed? Is it not guaranteed? I showed you that a few minutes ago. Then I showed you how I got your risk down and how I got your fees down, right? Then I showed you what your after-tax income was going to be against your budget, and that you're going to have excess cash flow. And then I'm showing you how much you can leave to your beneficiaries based on my assumptions. So now you get to see that this is just math. It's nothing but math. If you want me to change those returns, I don't want to go any higher. If you want me to put 3% there and 1% at the bank and 1%, I'll do whatever you want me to do there. But you'll still have the cash flow to maintain your lifestyle in retirement, and you'll still be able to leave money to the beneficiaries. And what most people do, they meet with an advisor once or twice, and what do? You just give them your money. You have none of this stuff. You just give them your money and you hope it works out. And what happens, as I showed you early in the presentation, is you worry and you worry and you worry. You worry that you're going to make a financial mistake. You worry you're not going to have enough income to last the rest of your life. You're worried about how inflation is going to impact your budget. You're worried about long-term care. You're worried that can you leave money to the kids, and guess what happens? You worry, you have stress, you don't spend your money, and you die, right? What I'm trying to show you is that if you put the math together, if you put the science together, if we spend the time that is needed to do this, you will feel more confident, comfortable, and you'll have more knowledge about what you're doing. And they go, oh, they're all nodding their head at this point, right? So if you don't understand what you're doing, and most people don't, they have a stack of statements there. We're going to put all this stuff not only in the spreadsheets that I'm showing you, but we're going to put it all in writing for you. Dan and I are going to write anywhere from a 15 to 25 page narrative when it's all over. Where were you at when you met us? What were the objectives you identified in the planning process? What were our recommendations? How do I support my recommendations? What are the advantages of the plan I've created for you? What are the disadvantages of the plan? How are we going to execute the plan? Step by step by step by step. How do the products work? We're actually going to read that out loud to you. Do you now believe you know more about your money than you ever did before? And the answer is yes. Everybody will say that because we're showing you something you don't have now. And I don't know any other place that you can get it, at least in our town, because nobody is doing what we're doing, because it takes time, effort, and a very specific skill set. So, the entire planning process, I tell everybody in this audience, don't settle for less. Now that you know what we do, even if you don't like me or you don't want to come see us at our firm, that's okay. Find somebody that does what we do. It will just enhance your life. It'll give you the highest probability of success. So if you do meet with us, it doesn't happen in one meeting. It takes us time to go through this process, but in the end, we will develop the retirement income projection for you, as I showed you, the income and tax analysis, the analysis of the beneficiaries I just showed you, and we'll put the entire plan and those details in that plan in writing for you. You probably think these services will cost a lot. They're expensive, they are. And we have a whole staff that helped Dan and I put this together. It's not inexpensive. It's thousands of dollars of labor costs, right, in time. But we get paid like everybody else. We don't charge you extra for this. This is part of the process. This is what you get from our firm. So I'm almost done, folks. I just got a few more slides. You really have three choices at this point. Choice number one, you can see, Jim, that was very interesting. It seems like you're very knowledgeable and you know what you're doing. But, my husband is managing my money, and I want to continue to do that. Well, that's fine. But I know if you're managing your own money, you're going to worry about making bad decisions. Should I buy? Should I sell? Should I get in? Should I get out? That happens with everybody. You worry about the next steps you should be taking with your investments. And a lot of people worry so much they can't sleep at night. They're looking at their iPhones all day long. What's the stock market doing? But that is your alternative. If you want to self-manage your money, I applaud you. But that's what you're going through, because I've been there before, right? Or number two, you can say, well, no, Jim, that was very, very interesting tonight. Thank you for the presentation. But we really like our current advisor. They're really great. Or we're going to think about going to a big brokerage company. Well, if you do, they're going to always tell you to hang in there. Don't get out of the market, right? We will not tell you that, and based on what I showed you early in the presentation. They will put you in a 60-40 portfolio, and you will not have a plan. You will have investments. They will take your money, they'll stick it in a bunch of mutual funds or ETFs, and they'll call you once a quarter. And when the market goes up, you hope you make money if you have the right products. When the market goes down, you will lose money. When you lose too much and you feel uncomfortable, you call your advisor. What's he going to tell you? Stay in it, hang in there, don't get out. We will never tell you to do that. Or thirdly, your last choice is you can meet with me or meet with Dan. We will sit down with you. We will walk through what you want your money to do for you. If we go through the process, everything that I showed you tonight and more, we're going to deliver to you at no cost. You will have a plan in place before we invest $1 of your money. Nothing will be invested until you sign off, I sign off, Dan signs off, and your wife signs off, if you're married. So, now these are new slides Dan should put together. I haven't read them yet. Our specialty is building customized written retirement income plans, a written document that provides a comprehensive actual plan for retirement success, a risk assessment of your current assets and the new potential lower risk with our modified portfolio. We'll do a fee analysis showing current fees you are paying and what you will pay with your new portfolio before you invest your money. We'll do a retirement income analysis showing where your income is going to come from for your remaining life. We'll help you do a budget showing the income you're going to need on an after-tax basis to maintain your budget. We'll do an income tax analysis showing how much tax you'll pay, net monthly after-tax income, and monthly excess cash flow. We'll do a legacy analysis showing you how much you can potentially leave to your kids, grandkids, or beneficiaries after you have used your income for assets for income. And we'll put the entire plan in writing for you, signed by us, your advisor. So hopefully you learned a lot tonight at my presentation. And again, in summary, we'll analyze your risk and we'll do a risk reduction plan for you. We'll show you how to avoid big losses. We'll give you the real data on stock market returns, the total fees you actually pay. We'll show you the safe income withdrawal rates and how to maintain cash flow adequately in retirement. We'll show you how to generate dependable lifetime income. We'll put a written retirement income plan together for you with no cost. And at this point, after tonight's presentation, you now completed the first step in your education on money. So your second step will be your free, no obligation, second opinion and plan. You get to find out where you stand financially in your plan for retirement if you meet with us. You get to find out how much risk you have right now, and if it's too high, you get to adjust it down to what you are comfortable with before you make a financial mistake. You get to find out how much income you can take off your assets and how long that income will last for you and if you're married, your wife. You get to find out how much you are paying in fees. You get to find out how much you will pay in income taxes in retirement. You get to find out how much you can potentially leave to your beneficiaries when you pass away. For the first time in your life, you get everything about your money in writing. So we're kind of at a crossroad right now. Number one, you can say, Jim, that was very interesting, but I'm going to do the same thing I've been doing for the last many years. And that's fine, but I will tell you right now, you'll keep risking your money. You will keep worrying about your money, and potentially you'll keep going without. And Albert Einstein phrased this perfectly. He said that's the definition of insanity, right? Doing the same thing over and over and over again and trying to expect different results. With us, you're going to get different results because we don't do the same things over and over again. Or alternatively, you can seek a second opinion from myself and my partner Dan at my firm. We will show you how to protect your money. We will increase your income. I don't know if I can reduce your fees or not. We will try to reduce your fees, but I don't know what you're paying in fees. And we'll feel more secure and you'll enjoy life more. And for once in your life, you'll learn how to take control of your finances. So if you're serious about creating a safe and secure written retirement plan, we can help you. Our typical client has between $1 million and $20 million of assets that we manage for them. But as you know from the flyer that we've sent you, if you have at least $500,000 in investable assets, we'd be happy to meet with you to see if we can help you. And when I say $500,000, that does not count real estate. That means money in the bank, stocks, bonds, mutual funds, ETFs, IRAs, non-IRAs, trust accounts, or 401ks, or the retirement account. All that added up, if it's $500,000 or more, we'd love to meet with you. But again, that does not count real estate or your home. So here's what we're going to give you. Number one, you're going to sit down with either Dan or myself on a one-on-one basis. We'll find out where you're at and what your goals are with your money. We'll actively listen to what you want to happen with your money in the future. We'll meet with you as many times as needed. There's no fees charged for that. We'll design an actual written plan for you. We'll reduce your risk against large losses. We'll never tell you to hang in there and write it out. We'll create a dependable lifetime income plan for you and your wife if you're married. We'll show you how to replace your paychecks with dependable, guaranteed lifetime income. We'll invest for growth without you taking excessive risk. We'll help you understand your money for the first time ever. We'll help you stop worrying about your money, and we'll never, ever, ever obligate you to do business. So all of you have a brochure in front of you on the counter. Can you open that up? And you'll see this a calendar there. Please pull that out for me, and I'll grab my glass of water. I won't talk until all the calendars are open in front of them. I'll look around, and they're all scrambling for the calendars. Won't say a word till they have it. And I said, what I want you to do at the top here, I want you to fill out your contact information, and do me a big favor. If you come in the first time and meet with us and you don't want to bring your statements for some reason, that's okay. But just circle, do you have more than $1 million of investable assets, not counting real estate, or do you have between $500,000 and $1 million? Just circle it, right? So when you come in, at least I know where I'm focused at, so I don't waste your time. Here, I want you to pick 3 different dates that you can meet with us. Now, it's only for the first meeting, not 3 meetings, only 1 meeting, but there's a number of people in the audience. We might have an overlap, so I want to back up. So go ahead and circle 3 different dates, 1, 2, and 3 for your priorities. So they're doing that. I said, I'm going to give you a wrap up here. Our offer again is the following, and this is the worst thing that can happen. You'll spend some time to meet with myself or Dan to become more educated about your money. It's really interesting. More people spend time planning their annual vacation than they do understanding their money. Number 2, you receive a free second opinion about your money. You receive a free customized retirement income plan, risk plan, tax plan, fee plan, and legacy plan. We won't charge you any planning fees, no matter how many times we meet with you. You'll get a free signed copy of Mama's Secret Recipe for Retirement Success that was a bestseller on Amazon. You'll get a free signed copy of 100 Shades of Financial Freedom. You'll get all this with no obligation or pressure to do business with us at all. You can walk away with all of this and keep it all free, guaranteed. I want to thank you all tonight for listening to my presentation. I hope I had some impact on how you look at money, and I know I can help you. I really do, and I'd love to meet with you at my office. So if you're interested and qualify, just fill out the calendar. In the next 10 minutes, my staff will come in and pick up your calendars while you're eating dinner. We're going to schedule your meeting, and for those people that signed up, we're going to schedule, give you a package before you leave with the directions to our office. Thank you very much, and have a good dinner. And they all, they start clapping. So I took you through those new slides that Dan did. I had never seen them before. I read them, right? And I probably stumbled a few times, but if I do it the second time, I won't stumble. So anybody can do this. Anybody can do what I just did. I just read that stuff. Dina?
Yeah, there were a few questions. One quick second. I just want to make sure I get them all. So, Joel had asked, are the slides about Peak Financial still included at the beginning?
Include what?
Are they still included at the beginning? Slides. Are the slides about Peak Financial still included in the dinner seminar in the beginning?
I read that beginning. That was the beginning. I just read through it. So what I just showed you is what's there. Are they looking for something different?
No. So I think I actually went, I just looked at the PowerPoint that I'm looking at, the full one in its entirety. Uh-huh. So the beginning few slides Jim read, right after that are the Peak Financial slides, the ones specific to Peak. So you'll see, I am going to put this entire PowerPoint into the Dropbox right after this call. So yeah, there they are.
Yeah. Yep. All these slides, I didn't go over any of these slides at all. And they're all there. Nothing has changed. The only thing Dan changed was these two slides up front, right here, 1 and 2. Then he changed the second line. He changed that second line there. 4 of those slides, or this one up here, that's 5 slides. And then I went down here and he changed these back 2 slides. That they have animation there, but he changed those back 2 slides. So he changed 7 or 8 slides. That's what he did. But all the other stuff is there, and I just didn't go over it with you.
Yes. So if, for example, you already have your PowerPoint all created, I will put this thing in its entirety so you can see how it is. And if you want to add any of these slides, all you have to do is just download it, right click on the slide, copy it, and paste it into your PowerPoint that you're currently using if you want to add it. And if you need help, I can help you.
Frankly, I don't know if I'm going to use those new slides or not yet. If I get comfortable with them, I'm going to. I just read them for you just now. I'm going to sit back, and if I get really comfortable with them and can do it in a fashion that makes me, believable in the audience, I'll use those. If not, I'll just use the old PowerPoint. You don't have to use them at all, right? I want to be comfortable. I was uncomfortable reading those because I was just reading them, right? But I wanted to show you that you could do it just like I did. But I'm going to get really comfortable, so I'm looking at the audience and not even reading them, and I feel natural doing it.
Let's see. Dave wanted to know, can we determine their fees without using YChart software?
I don't know how to do that. I mean, you can look at their statement and try to get an idea of what their advisor fees are, but if it doesn't, sometimes it's not on the statement, right? You got to go through the transactions every month to figure it out. I always ask people, what are you paying your advisor? And nobody knows. I don't know, or maybe 1%. So I asked him, I said, do me a favor. If I can't find it in the statement, I'll tell him, send an email to your advisor. I don't want you calling him, because I don't want him telling you, because it may or may not be accurate. I want you to say, I'm doing some tax planning. Can you please tell me what my fees, what I'm paying you and your firm in fees? I had that done 2 weeks ago, and guess what? The advisor called him. I said, don't take the phone call. They sent another email back. He sent me an email back, you're paying me 50 basis points. It was Wells Fargo. And I said, that's not accurate. There's no way you're paying 50 basis points for Wells Fargo. It's impossible. I do this every day. Well, she brought in her contract, the original one, and they were paying 75 basis points plus another 19 basis points for the platform fee and the money match. Well, they're paying 1.25%, right? But the advisor, you're paying me 50 basis points. He's telling the truth. That's how much he got. He got 50 basis points. But he didn't even tell them the other fees, and forget about the mutual fund fees or the trading costs. That's what we use YCharts for.
Hang on 1 second here. Do you use annuities with trails for both income and accumulation annuities?
We always take the trail if it's offered, always. It builds up recurring cash flow. Right now, if you're just getting started and you're funding dinner seminars, you may not be able to do that. You may have to take all the commission, right? Because you're trying to build your business. But long term, if you can take the trails, it makes a huge difference in your cash flow planning.
What would you say if someone says, thank you, but I just would like the plan?
We would never do that. It didn't even come up. We don't let them say that. We would never, we never deviate from our cycle, ever. If they want a plan, we're not gonna just give them a plan. Now, when they come in, there's no commitment. They may think in the back of their head, all I want is a plan to see what's going on, but I'm engaging these prospects. So Dan, we're engaging them. We're taking them through, their life, their future. And I mean, they're going to like us or not going to do business with us, right? They might think that, but I'm just going to hand them a plan. That's a waste of our time.
Yeah, you normally, after someone's come to a dinner seminar, it's usually not even until the third appointment where they even visually see your first draft plan, correct?
That's exactly right. It's never before the third meeting. For me, it's always the third meeting, right? For me, it's always the third meeting.
And they're just seeing it for the first time. There's nothing written. There's nothing happening there.
So,
Yeah.
Meeting number one is a discovery meeting. The only thing we do at meeting number one, besides talk about their goals and their wants and their needs and our background in our company, some of the things that we do strategically, I'll do the risk tachometer into that meeting typically. That's meeting number one. Meeting number two, we're showing the Y chart data, the nitrogen data, we're showing the annuity presentation, we're taking them through our money management application at meeting number two and expanding on their goals. Meeting number three, I have enough data now to do the draft plan.
Yep. Let's see here. Oh, I thought there was one more thing. Oh yeah, Dixon, does it work to read the script for each slide when you do your first 2 to 3 seminars? And in order to read the slides, you would have your laptop in front of you so you don't have to look back at the PowerPoint or big screen.
What I would suggest is this, and it doesn't take much time to do it. Whenever I've done a presentation historically and it's new, I will work on that for a week in advance. I'll do it 15 times if I have to. I'll do it, read it. Then I'll do a Zoom and have the Zoom record me. How do I look doing it? And then I'll stand up and I'll do it standing up before I even in front of a prospect. I will never get in front of a prospect unless I'm screened and all that, right? I want to be, we're spending a lot of money to get in front of these people at a restaurant. It's a lot of money. I don't want to hiccup. That's why I didn't use Dan's presentation last night, these new slides, because I said, I'm not, until I have those down pat, I'm not doing it. I'm just doing my own presentation. It'll only take me an hour to get them down really comfortable, right? I'll go over them 3 or 4 times. I'll be fine with it. But yeah, you don't want to take any risk on this. We're spending a lot of money getting in front of this audience, and we don't want them there just eating dinner. We want them to come see us.
Let's see. Dixon, I think that answered your question there. Let's see. Michael, you said, is there a software you use for the plan? It's you're using Fiduciary Genius for the plan.
Fiduciary Genius is our software that's been created in-house. Fiduciary Genius over the last 3 years have put it web-based. It's everything we do. It's dynamics. It's fantastic. I'm not pitching. We don't get any money from that at all. It's just that you get to use it, and you'll knock the socks off your clients. I promise you, if you use it. I mean, I'm using it. I started using it about a month and a half ago, and it's made a huge difference. The presentation of that material is so dynamic. It is fantastic. And all you have to do is go through it once. I built my first plan myself I have a person in my office is our paraplanner. He does all my plans for me. I just give him what I want and lay it out for him. He does the plans. So about 3 weeks ago, I said, I'm going to have to learn how to do this myself in case my guy gets sick, right? It took me about an hour and a half, 45 minutes to do my first plan. But next time will take me probably an hour and 15 minutes. Randy's doing it in about 45 minutes to an hour. He's my paraplanner because he does them all the time. So less than an hour or about an hour. Once you get good at it, he does a full plan. I mean, a full plan with all the details. If they have 5 or 6 or 7 accounts, I mean, it's all in there, and you get a tax plan, an income plan, a legacy plan, a risk assessment plan. It's really phenomenal. You guys will love it if you use it.
Let's see. I don't think I have any questions left. Does anyone have any questions? Oh my goodness, I can't believe the time. It's actually we're a little bit past. Sorry, it was so captivating. No. Generally I try to make sure we keep on it. So I apologize to everyone. Thank you, Jim. Thanks so much for going through that. Like I said, I will download this into Dropbox. It will be in the presentations folder. Again, if you've already been working on one with the master that you have, you don't have to redo everything. You can just right click on one of those slides and click copy and paste it into your new, your original PowerPoint presentation. So if anyone needs help or has problems with this, just message me. I can help you. It's very easy to do. So like I said, that will be there. I know many of you have already signed up. You've registered to attend our in-person event. Dan and Jim will be there, Ryan Pace, myself, David Christie, who is great at storytelling and can help out in a lot of ways. We will all be at the in-person event. So if you have not registered, I think there's 1 week left open of the registration. So please make sure you do so. We have people that have gone multiple years now, and really get a lot out of it. It will definitely energize you, motivate you, and, help catapult your business after you attend the event. So if you have any questions about it, always feel free to reach out to me, and I hope everyone has a great weekend. Thank you again, Jim.